Hi there, it's Kirsty here, and it is a super fun Friday night. And so, instead of partying out on the town, I'm going to talk to you guys about fixed and variable rates. And if you're being sent to this video by link in an email from one of our brokers, it's probably because we're asking you at the moment to have a think about whether or not you want to fix part of your loan. And I've been explaining this so much to people lately that I thought a little video might be really helpful. So when you go to a bank, there's two main different types of products that banks offer: basic products and fancier products. So a basic product is typically a variable rate home loan with a low interest rate and usually no ongoing fees. And it's a very simple home loan. Once you've made 1 month's worth of extra payments, all the rest of your extra payments will build up and be accessible as redraw, and you can pull them out if you need to. So very, very simple basic product. Now, the fancier products, they're not for everyone, and sometimes we won't recommend them to you, but if we are, there's probably a compelling reason why. So usually the fancier products have a bigger benefit for bigger loan sizes, not always, but usually. And if there's any chance that your property may become an investment property later on down the track, we're very likely to recommend one of the fancier options, because then it will have an offset account. And putting money into an offset account instead of into the loan redraw is very helpful if you want to move that money in and out of the offset account, because you can do so without impacting tax deductibility within a loan, which is very helpful if the property is now or is in the future going to be an investment property. Something to have a chat with your accountant about as well. But predominantly at the moment, if we're recommending a split loan for you between fixed and variable, it's because there are some very, very cheap fixed rates out there at the moment. And so what we will often do is recommend that you may want to split your loan in two, between a fixed part and a variable part. And the reason you would do that is so that you can kind of get the best of both worlds, so that you can get a portion of your loan fixed. You know exactly what those interest rates are going to be, usually for the next 1 to 3 years. And then in the variable portion, you can either, depending on if you have redraw or if you have an offset account, you can either offset or pay that loan down quicker in the variable portion. So I very rarely will recommend people fix all of their loans, because I like you to have capacity to pay it down quicker, especially when it's your own home. But obviously this video is going to be in conjunction with some specific advice to your situation. So what I want to do is I want to show you on a very quick calculator that we've got the benefit of looking at a split loan at the moment. And I'm going to use some indicative interest rates that are out there right now. So what I'm going to do is share my screen and take you over to a little calculator that we've worked up here in Office. So let's say your home loan was $350,000. And what I've done here is, at the time of writing this variable interest rate here is the Commonwealth Bank basic product interest rate for a home loan that's over 80% in borrowings. Now, if you put all of your home loan on variable and it was a $350,000 loan, you've got your repayment here, your interest rate, and this is what it would all look like. But if, say, for example, you sat down and thought, okay, I'm going to fix my home loan for the next 2 years, and the interest rate the bank will give me is down here, and it's 2.29%. So what I'm going to do is, I feel like in the next 2 years, I'm not going to be able to pay an extra amount over and above my fixed loan of more than $50,000. So I'm going to leave $50,000 variable at this interest rate up here, this 3.13, and I'm going to fix the rest of it, which is $300,000. So what this calculator does, and I'm more than happy to send you this if you want to have a play around with some figures, but it looks at the option of all variable at this 3.13% interest rate versus part variable and part fixed. And it shows you that for this person, if this was their structure that they were looking at, over just the first year, they'd be $177 ahead per month under this structure of the split loan. And that's predominantly because this fixed rate is so cheap at the moment, which is about $2,000 a year. Now that's factoring in the annual fee of $395. Now, the important things to remember is, once you go from a basic structure to a fancier structure, it's not very easy to go back to the basic structure typically, and the fancier structure does have an ongoing annual fee. Also with fixed loans, you do run the risk of there being break fees if the loan is needs to be broken within that time period. Say you sell or need to refinance, or something happens where you need to restructure the loan. The break fees typically occur when the market interest rates are lower than where the break fee is. And also there's lack of flexibility around this fixed rate. So I said beforehand, I don't want you fixing if there is going to be extra repayments that you need to pay into the fixed portion. So always I would want you to keep variable more than you think you'll be able to pay off extra on the loan, because I want you to have some flexibility. Now let's look at a different structure. I have some clients that I'm chatting with tonight that I actually recorded this video for. So their home loan is going to be about $488,000. Now they're really good savers. They're in really, really good jobs. Their interest rate with the bank would actually be 2.79% at the moment. So is there still a benefit in them fixing some? Well, let's say, for example, that we had like a 2.9% interest rate with offset. So sometimes the variable rate with offset is a little bit more. And let's say they thought that they could pay off an extra $150,000 over the next 2 years, for example, and we fixed for 2 years. So they had 150 variable and 338 fixed. If we look over here, there's still a saving of about $1,000 a year in doing that for them. But if they want to go and have the entire amount, you know, variable or any sort of fixed, they can use this spreadsheet to play around. But these fixed rates at the moment are just so compelling that it's definitely worth considering them. It's definitely worth having a play around with them. Let's say, for example, your home loan was $700,000 and it was the difference between 3.13%, maybe fixing at that getting variable pricing at 2.9% and having the rest of it at the 2.29% fixed. You can see the bigger the loan size, quite often, the more dramatic the effect. So if you would like me to run some numbers through this spreadsheet, or if you would like to have this spreadsheet to have a play around with, you absolutely can do. I will also send out some like articles for you to have a read to look at the difference between fixed and variable rates. Anytime we make a recommendation like this, it's going to be because there's a potential benefit to you or a saving, but it's not a must. You can go with the structure that works for you. We're just going to want to talk to you and make sure that you know all of the options out there. So if you would like to have any further discussion with your broker, please just send them an email, book in a time. Just remember that there are limitations to fixed loans. So when you have a split structure like this, you do not want to be making extra repayments into the fixed loan if you can avoid it. Because what happens is you can make extra repayments, usually up to $10,000 a year, and that can vary lender to lender. But any extra repayments you make into the fixed loan are effectively trapped there until the fixed period runs out. So fundamentally, what you want to be doing is either making extra repayments into an offset account if you have an offset structure, or into the variable loan. And that's typically for owner-occupied properties. That's where you want your extra cash going. Any questions or queries, please let us know. Remember that this is not specific advice to your situation. This is a general video to help explain the concept, and we want you to come back to us with questions or queries. All right. Good luck with your decision. And it's probably pretty exciting right now because you're either just about to buy a property or just about to get a nice saving on your home loan. And anything we can do to help at Uploans, please let us know.